Well, what about slow finance? Our next guest has written a book built around the premise. His ideas include keeping investment local, buying into smaller companies, and reinvesting to show asset sustainability. Well, Gervais Williams is also the manager of the Diverse Income Trust Fund at MAM Funds, which has £50 million in assets under management. Thank you so much for joining us. In terms of what this means, I just wanted to, first of all, just make it very clear for all of our viewers, Gervais, what this slow finance means. It means investing locally, but what, in companies that are trading, or also your local butcher, which is sustainable and fair trade?
And I'm talking about local in terms of quoted companies. And what I'm really trying to introduce is the idea that we've gone through a period of globalisation, we've gone through a period of change, and we're all trying to see what the change might be like going forward. And looking at the globalisation of the food sector, we've seen big change of attitudes post the globalisation of food. People getting more involved in making their own decisions, becoming more active. And I think we might get the same kind of pattern with investors becoming more active and so on.
So is it basically choosing companies that you know, or is it companies that are local? I'm struggling to understand. For example, you say Vodafone. Vodafone is very present here, so if I'm a Londoner, this would be local, but they're also very present in emerging markets.
Absolutely. And Vodafone clearly could be an investment locally to you, but what we're really interested in is in companies which you can see and touch. So rather than putting your capital overseas, perhaps in emerging markets or other places where you're not sure what you're actually getting in terms of your assets, investing in things where you can actually visit, you can see them, you can talk to the management, and if you're unhappy, you can make your feelings felt.
So it's basically products, it's materials. Is that all it is?
It can be services, it can be all sorts of things. I mean,
but that you use yourself?
Not just that. I mean, as long as the businesses and the operations are local to you, then you can go and see them, you can touch them, you can find out what's going on. You may be that you drink in the pub with them at night, people who work there, or maybe you can go to the AGMs and actually see the management directly. And
so what would your ideal portfolio be? Are these AIM-listed companies, or are they bigger companies? Would BP, for example, show in there because I put my petrol from the BP fuel pump in my car?
Yeah. Well, in fact, what actually we're talking about is moving away from indexes and having your investments determined by what the weightings are in your index into a bottom-up stock selection. So it can be small companies, it can be big companies, but they're all selected because you yourself have done the work, you're satisfied about them, and it's all about making money in spite of perhaps a flat market and lots of volatility.
Is this a Warren Buffett inspiration? I remember following Warren Buffett around Europe when he came to buy a couple of companies years ago, and he said, you know, I love Coca-Cola because I drink Coca-Cola. I love this because I use their banking systems. Is it that kind of philosophy?
It's probably more, it's further down the market cap scale. The thing about Warren Buffett, of course, is he has huge portfolios, whereas the nice thing about this strategy is individuals can follow it, corporates can follow it, but it will mean that you take a degree of more liquidity risk, but because you're taking liquidity risk, you can buy companies which have a growing income, which compounds over time and delivers return in spite of volatility. I mean, the trouble with volatility, of course, is strategy based upon transactions can be caught out, as we've seen in the hedge funds recently.
And so, Gervais, bottom line, the rationale behind this is that if I'm a small investor, don't have to follow all of the saga with the European leaders every day, but can understand the business because I can touch and feel it.
Exactly. I mean, we don't know whether Greece is going to be in or out of the euro in the next 3 or 6 months, and we want companies which doesn't matter whether they're in or out of the euro, and you can actually invest on that basis. And there's an app which goes with the book, free app, which actually shows you all your companies round about you, just so that you individually can see the premises around you.
But how can you be sure that a Greek default won't impact also your local business? If it's a Vodafone, they might have trouble, financing themselves. I can see that my phone works and that their applications are good, but at the end of the day, if they don't have the financing, how can I check as a small shareholder that they're not going to go bankrupt?
Well, I mean, you can do your own work. You can actually look at the companies themselves. There's plenty of investment reports available, so that's absolutely fine. But of course, because a lot of the local businesses are actually in net cash, these are quoted businesses, a lot of them have net cash positions, of course, they can sustain a difficult time. I think it's going to get pretty lumpy out there in the next few years, and I think the companies with difficult balance sheets may find it very difficult, but those companies with good balance sheets will get stronger, strong will get stronger, weak will get weaker, and you can identify that yourself as an individual.
So do you also, preach you have to have a company that you actually like and you trust in?
Absolutely. I mean, the point about this is that you can actually meet the management team because they're local to you. You actually can find what they do. You can see where their car park is full late at night or whether they've gone home early. So you can actually keep an eye on them. And that local link gives you much more confidence in what could be very tough markets. And we'll be shaken around. And with that volatility, you could find that actually you get shaken out at the wrong price and you don't make a good investment return.
You talk about tough markets. Are we going to see huge volatility, and are we going to also see a huge correction? And are we going to talk about a double-digit correction for a lot of equity markets?
I mean, it's hard to know at the future. I think markets are very volatile already. I think that volatility is here to stay. We've seen lower levels of turnover. I think that's here to stay too. So I think we're going to find it very difficult to have transactional based strategies based upon sort of exchange-traded funds and such like. I think it's quite difficult to make money in those areas. We've seen some of the really major professionals being caught out there. So finding things which you can hold for a duration and compound the income, because as you know, total return on market is much more dominated by compounding of income than it is in capital gain.
All right, Gervais, thank you so much. Gervais Williams, their Managing Director at MAM Funds. Thank you so much for joining us.